Yeah, hello everybody. This is Jay Goldman, head analyst at FMTrader, coming with you at you with my new video. And this video, I'm going to do the exact opposite of what I did the last video. Last video, I talked about the shortest trade available, which is 60 seconds. Okay, today I'm going to talk about long-term trades in binary options, and what's the advantage of these trades, and why we need them to create consistent and long-lasting profits and maintain a profitable account over time. Okay, so let me get back to my next slide. I'm talking about expiries that are longer than one trading day. Sometimes a few days, sometimes a couple of weeks, sometimes even a month and longer if I think that's the best opportunity there. What's the advantages? Number one, they're less volatile than shorter term trades, meaning in the short-term trade, a 10, 15-minute trade, the last, 20 seconds, 30 seconds, minute can have a big effect on the outcome. Something can suddenly change, and even though we identified the trend, we can be out of the money. On a longer-term trend, that's not going to happen, okay? If we identify the trend correctly, we're generally going to be in the money, okay? Risking larger amounts, and therefore risking larger amounts is more comfortable. Okay, you'll feel a lot more comfortable risking, a big portion of your account on a week or 2 week trade than on a 30-minute, 10-minute trade. Okay, another advantage here is the ability to make adjustments to the trade. I'm not talking, obviously you can't change the trade, but what you can do is either take other trades that either enhance these trades, or in the event that something happens, we can always take a trade that will kind of correct our mistake, so to speak. Okay, the success rate on average is going to be much higher on these trades. Okay, and it's perfect for people who have busy schedules that don't have time to sit, and do these short-term trades in the market. They're busy, they have lives, they have jobs, they have families. So here you go. You set a trade, a long-term trade, for a couple of weeks. Takes you 2 minutes, and then, you check back in a few weeks to see the results. Okay, so I'm going to show you a couple of trades that I did with my clients for this month, and I'll show you exactly why we did them and how much, how profitable they can be. Okay, so what I did here is I took a snapshot from one of my clients' portfolios, all right, that we opened these trades with. If you're watching this, you'll probably recognize your trades. And right now, and I'm showing you a chart of we did the pretty much on two assets, on the dollar yen and on gold. Okay, see, we took them opposite. Now, here I'm referring to the trades we took on the dollar yen. As you can see here, we have 1, 2, 3, 4 open trades. Don't notice these two; they were just test trades. So see, $25. You see, each trade is 1,000 Canadian dollars at this fact. And why we took these trades at the beginning of the month, I had a very strong information that the dollar yen is going to go up. Okay, and so what I did was this: we had expiries. We took all these trades you see mostly in the beginning of the month, either end of last month, 31 of October, beginning of this month, and some we added later on. So now we had expiries that expires on the 15th, the 22nd, and the 27th. So if you see here the expiries, you can see they're all different. Now, why do we take different expiries? Simply to kind of balance our risk. We don't want to put everything on one day, so we want to have a nice. We want to spread it out a bit and have a few opportunities. If something happens in a specific day, we can always recover in the later trades. So, as you can see, we took two beginning trades, one expiring at the 22nd, two expiring at the 22nd, and two expiring on the 27th of November. As you can see, when we took the initial trades, dollar yen was trading at 98.3, as you can see right here, 98.3. Okay, and we took it up. As you can see right now, the dollar yen is about 100. All right. So what we did, we waited to see once we saw the trend was going as planned. We added secondary trades here. See over here, you can see trades that were made on the 13th. Okay, at a higher rate, 99.561, 99.562. Okay, and these trades are expiring one on the 22nd, which is tomorrow actually, and one on the 27th. Okay, so we got our initial trades, then we made other trades because we saw the trend was continuing and we wanted to capitalize on the movement. All right, so this is the dollar yen trades. Now let's go to the next slide and I'll show you the gold trades, which you see up here. So now we're talking about these three trades, the three open gold trades. You see one for 2,000, 1,500, and 500. Again, two of these trades were taken, one of these trades is taken for a longer term, for the 30th of December, meaning in about a month and from now. The other two were taken for the 22nd of November and the 27th of November. Okay, now we took them right here around the 19th when gold was at 1,200, sorry about that, 1,274, 1,276. Okay, right now, as you can see, gold is at 1,242. All right, so there's about sorry, a $30 difference right now in the price between you know, where we took them and where they are right now. Okay, so the likelihood of these trades being successful is very, very high. All right, and again, see how we spread the trades on different dates to not, you know, put everything on one specific day. Okay, so as you can see here on this specific portfolio, we're talking about $8,000 in trades, which are all in the money. Okay, all in the money, and that's, you know, 80% profit on $8,000. So that's a pretty nice profit in a few, you know, couple of months. All right, so yeah, so I hope you guys you know, sometimes take advantage of maybe the longer term that you're not thinking about, and you know, obviously when you're working with me, then I tell you these trades, so you know, hopefully you'll be able to you know, catch the next opportunities that we will have. Anyway, I mean, I went a bit long this time. I usually try to keep them under 5, but it happens, so I had a lot to talk about. And I hope everybody, you know, gained something from this video. And, you know, I hope to talk to you all guys soon. Thank you. Bye.